What up? What up? What up? It's your resident online mortgage lender, Robert Lewis, NMLS license number 180100. Hey, welcome back, guys. Where the goal of this channel is to provide you with the information that you need when looking to secure financing for residential real estate. That's one unit, duplex, triplex, or fourplex. We lend nationwide. And today's video, I'm going to be breaking down what a self-employed borrower is and how, if that is you, you should go about securing that financing that you need for your home when using the FHA loan program. So before we get started, please take a few seconds and subscribe to the channel. The analytics say that 97% of the people that come through the channel like the information, you're watching it, but you're not subscribing. And that's my fault because I don't ask. So I'm asking, subscribe, hit the notification bell so that you will be notified whenever we bring new content to the channel. So without further ado, let's get into it. So I think what we should do initially is define who possibly could be a self-employed borrower. I find even today, with all the information that's online, that is still something that a lot of people aren't really sure of. So let's try to sum it down and give you 4 to 5 categories. All right. So obviously, if you're a business owner and have been in business and 100% of your income is derived from said business, you would be a self-employed borrower. That's the obvious. But here are some that are not so obvious. Say you have a W-2 job and you're also a partner in a business where 25% of your income comes from said partnership. Well, then from an underwriting standpoint, we would look at you as self-employed as well and would have to require certain documents when qualifying you. Contract workers could possibly fall into this category. I deal with a lot of traveling nurses and things of that nature. And in the day and time that we're in, there are a lot of you that are on contracts. So easy way to look at it is if you're receiving all of your income on, a weekly, biweekly, monthly basis and no taxes are being taken out, in other words, you're responsible, well, then you are self-employed, right? Business for self. Freelance workers, okay? Sometimes gig workers can fall in that category as well. So those are just some things to think about, some categories that you might want to think about to see if you are in said categories. With that said, when you're making the decision mentally to move forward to purchase a home and you fall in one of those categories, you want to make sure that you gather the documentation that you'll need, okay, to be able to provide to your lender so that your lender can properly qualify you initially, okay? It's very important to have that application and that process done up front before you start going out to shop and secure a home, because you may be disqualified. I was looking for my words there. You may be disqualified and, get your hopes up for nothing, as well as lose a lot of money if you put earnest option monies down and or do an inspection. So if 25% or more of your income is derived from a business, you want to have those business tax returns minimum for the most recent 2 years. And really that's the test. If you're full 100% self-employed, you have to have a 2-year tax return or tax filed return minimum to be able to do a qualified mortgage. Okay. I'll come back with some videos talking about non-qualified mortgages where bank statement programs and things of that nature may be more applicable. but the 2 years of your tax return. So now, if you're a full-time business or if you have 25% or more in a business, you're going to have those tax returns from your 2 prior years. That could be a corporate tax return and or partnership. Okay. Now, if you are, 20 greater than 25% of income and you're a sole proprietor, we may not need the business tax returns. But what I advise is that you supply all this information to your lender of choice up front so that they can, or we can, make sure we are qualifying you with the net income and backing out any additional expenses you may have written off. Okay. Because that's really where the issue self-employed or business owners run into, is because you're utilizing the tax laws to its full, right? And because of that, we can only use the net taxable income that you reported to the IRS. And we're going to take a 2-year history of that income divided by 24 to get an average. Okay. That's the first test to get a ballpark of what income we would be comfortable with moving forward. I can tell you also you'll need a CPA letter, or your tax preparer can prepare a P&L, profit and loss statement, okay? Because that 2-year average, the P&L has to support that to show that those monies are still there. Now, if you have any declining income or anything of that nature, it's becoming more and more hard for you to qualify, especially amid the environment that we're in with, you know what's going on. I won't say it. So it's important to get those tax returns, profit and loss, as well as your bank statements, your asset statements. And we're going to look at, I could tell you for the most recent 3 months, or the 3 months closest to you closing, to assure that the average that we've calculated for the 2 years, the profit and loss, and your deposits going into your account for your business all are in line with the income that we're going to use. So it's important to have those documents up front and get them to your lender. Okay. Now, trying to think of what else. Those would be the main important documents, along with any W-2s, okay, and or 1099s that you've had over the 2 most recent years. Now, the reason that's important is sometimes, and even I'm speaking FHA now, I will post some other videos dealing with conventional, VA, and USDA as it pertains to this topic. But as far as FHA is concerned, sometimes if you've been in the same line of work 2 years or more, and you switched over to 1099 in that same line of work, sometimes if documented properly and there's not a decline in income, we may be able to use just that 1 year's worth of 1099 income, and you don't have to have the 2 years. But that's really the exception and not the rule. More times than not, I say in 98% of the cases, you're going to have that 2-year tax history. Guidelines even say that if you have a 1 year experience or training in an area and then 1 year's worth of 1099s, that's possibly an option. Again, less than 2% of the cases are going to fall into that. And really, it's all about documentation. Okay. That's where a lot of folks are challenged when running into these types of scenarios. The documents really don't add up. So one other thing I'll say before I move on, as a self-employed borrower, when you're completing your application, you want to make sure you cover that 2-year history, the most recent 2 years history of work or employment that you've had. And that's your employer's name or the prior employer's name, the address, good phone number for the human resource department, the title that you've held, okay, start and end date, because all those things can play a part in getting you over the hump if you don't have the 2 years history of filed tax returns. Okay. So, again, you guys can borrow monies to purchase a home using a qualified mortgage. And a qualified mortgage is going to afford you the lowest interest rates and more of the consumer protections, opposed to doing a non-qualified mortgage, say where you're using bank statement programs and things of that nature, and the interest rate's going to be higher and it's going to require you to bring in more skin to the game. That the loan to values are not as high, interest rates are higher, and sometimes there's prepayment penalties and or only adjustable rate mortgages. Now I've noticed here, and this is month of September 2021, more non-QM lenders are coming back into the fold. But again, qualified mortgages is where you want to go, and you guys can use the FHA program to get into a home. It's all about your documentation. So hopefully that makes sense. Okay. I'm trying to think if there's anything else that I want to cover as far as the FHA is concerned. Let me look at my notes here real quick to make sure I've covered everything. I also say this: if you have any business licenses, okay, those things are good to bring to the fore when you're applying for your loan. Okay. And then specifically with FHA, let's see here. I want to make sure I'm perfectly fine and happy before I end this video as far as FHA is concerned. Let's see here. I think that's pretty much it. I mean, you want to understand that FHA allows for lower credit scores, really down to a 580 middle score and up. So if you're challenged there, but know and understand, if you have credit challenges and you're self-employed, it's going to be more difficult, because as a lender, we're trying to assure that your income is stable. And that's one thing, again, with the business income or the self-employed or the commission income, it's not on a schedule or a stable or a scheduled track, right? It's going to ebb and flow. So that's one challenge. But then you don't want to exacerbate it with challenge credit. Technically, 580 and up. I would recommend 680 and up if you're looking to go self-employed and document your income that way, because that looks like a compensating factor. The debt to income ratios vary by lender. I know with us, with my company, which we lend nationwide, if you have an approved eligible, your back end ratio for an FHA could be as high as 55%. Now, do you want to purchase a home with a DTI as high as 55%? That's a personal call. That's on you. But we can go that high as long as we get the approved eligible. And this is obviously for primary residents only. This is not for investment properties and things of that nature. So hopefully that gives you some insight. The key takeaways are this: you want to start often and early with your lender or your partner of choice. Make sure you bring all documentation and communicate. Communication is the key. The application, the areas that often get overlooked are the 2-year history of working. Okay. You want to make sure you hit all employers that you've had over that 2-year history. And then hopefully there aren't any job gaps or anything of that nature. You don't have to be on the same job for 2 years, but we have to cover a 2-year history. Okay. Make sure you put that in chronological order. Make sure you have good contact information so that if your lender needs to make the case, hey, this person was in this line of work as a W-2 employee, and over this last year, they've switched contract basis or whatever, and the income is not declining, you may be able to use that 1 year, that 2% case. In my opinion, I don't see it a lot, again, due to the documentation. But those are the things that you need to know. And so start early, often, communicate, make sure you gather all your documentation. Okay. Tax returns, personal and business, if that's applicable, for the most recent 2 years, all 1099s that you might have. Okay. If you're self-employed and you don't have any 1099s and things of that nature, you may have to reach out to those other employers and get references or reference letters and things of that nature. All those things help. So again, you got to you have to trust your lender, be in good communication with them, and present the best case possible so that you don't have to wait the 2 years possibly. Now, if that doesn't work, 2 years is the number. 2 years of filed tax returns, and you want to make sure you don't write everything off, because we can only use the net taxable income that you've reported to the IRS. We're going to divide that over 24 to get a baseline of the income. And then from there, prove that your current income is still in line with that. And hopefully you don't have any declines or anything of that nature. Because lastly, as underwriters, what we're making the assumption of is that you'll receive said income going forward for the next 3 years. So, hey guys, there you have it. Robert Lewis, NMLS license number 180100. Don't be discouraged or dismayed if you're self-employed. FHA will allow you to qualify with that income. It's all about the documentation. So you guys choose your lending and your team wisely as far as real estate is concerned, and your lending professional, so that you can make sure you're properly qualified before you go out to shop for that dream home of yours. So if I could be of any assistance, don't hesitate to reach out. Any questions, leave them in the comment section and we'll get back to you. And that's it for now. My time is up. I thank you for yours. As I always say, be good to one another. Let grace abound. And until the next time, peace.